Hi, I'm Brent, the founder, lead analyst, and chief compliance officer for Trade Therapy, a registered investment advisor with the state of California. I'm the investment advisor representative. I founded Trade Therapy 2 years ago because a lot of our friends and family were really going through hard times. The entertainment industry out here in Los Angeles, where we're based, was hit really hard after COVID, after a strike. AI really came in and started negatively impacting friends and families' income. And we spent the past 20 years studying the institutional business cycle and leveraging it in the market. And we thought we'd start up an educational service for individuals that were either being negatively impacted or were concerned about the impact of AI on their income, to provide them with the opportunity to develop a new life skill, which is tracking where larger institutions like Wall Street are positioned in the markets and learning how to align your resources with them. Part of our motivation was to help friends and family avoid some of the common mistakes that many retail investors make because they're heavily influenced by the news and social media and aren't aware of the institutional business cycle and how Wall Street and larger operators in the markets leverage the news and leverage events like earnings reports to further their interests by staging big dramatic price moves, such as this move in Meta that we had been tracking back in late 2022, watching for a bottoming process in its institutional cycle. We were looking for a big dramatic drop. We got it on massive volume. But these are clear signs that the institutional cycle is turning, which it did. And then Meta went on a massive markup campaign in what's called a lockout rally. Here's a video clip of that coverage. Meta was part of our top-down analysis for Google last week. It's really one of the clearest examples of institutions managing a dominant trend, and really yet another example of a lockout rally that started back in the bottom in 2022 when headlines were flooded with calls for recession and how terrible economic conditions were, and we should all brace for difficult times ahead, only to see Wall Street turn around and run Meta almost vertically up out of that range in a lockout rally, never seeing it lose this white line right here, which is the 9-week exponential moving average. When it finally hit overhead supply here and started backtesting that 21-week exponential moving average, you can see that was absorbed very quickly as Meta continued breaking through overhead resistance, seemingly unchallenged. And so this is a great example of how Wall Street takes advantage of the perceived terrible economic conditions that are created by headlines conditioning retail investors to believe that there's this imminent recession looming. Wall Street institutions take advantage of that to very quickly rush prices up to their higher levels where they're looking to take profits before they allow any sort of a meaningful pullback, allowing retail traders to come into the trade. Every week, we start with top-down analysis on influences of the feature asset that we're covering that week. For Meta, we had covered the S&P 500 and the NASDAQ 100 to get a feel for what the markets were doing, as well as a couple of other peers to Meta, so we can see influences and how the overall sector was doing before we took a look at Meta itself. The video that you just watched is how we support every week our members receive our content online, as well as video breakdowns and the ability to post comments and ask questions. If you've recently just received an inheritance, if you are managing the family estate, or just your career's retirement plan, but are interested in having someone else align your assets with the institutional business cycle and taking advantage of some of these opportunities, we are actively engaging with investment advisory clients, and we'd love to hear from you. Another great example is our coverage on Tesla. Back in early summer of 2024, heading into this earnings report, there was an extreme negative narrative out in the news about Tesla, about how their delivery numbers were going to be down. And there was a very strong bearish reaction in the retail investment community we shared with our Clarity members some advanced technical analysis tools that we use. We don't expect all of our members to be experts, but we do want to expose them to the utilization of additional analytical tools to help identify whether or not sellers are becoming exhausted and setting up a big bounce, which happened as Tesla did have very negative numbers reported. The stock bounced and it then went on a big run. This is not uncommon. This is typical institutional behavior for big negative news cycles to just bring price back down to ongoing support levels where they had been acquiring the asset previously. This is how they compound their position. They take gains from previous trades, then they push price back down, and you can see volume reacting to it as they reacquire their position. Very similar to what they did back here in April of 2025. This was the big negative anti-Elon, anti-Tesla campaign when cars were being keyed and firebombs were being thrown at Tesla service centers. We added to our position here. We have been long Tesla for quite some time. We covered Tesla on a regular basis, so Clarity members get to follow the development of each one of these trades as we execute them, and as they execute their own trades, they can leverage our analysis as they learn how to do it themselves. Here's another example of the video support that we used for Tesla. But if you look a little closer, you get your head out of the headlines and look at the data, really pretty clear what just happened. Wall Street just took profit. You can see leading into that period of negativity, that negative campaign against Tesla, volume rising at the peaks, and that's Wall Street taking profit off of the table. You can see that this is a completion of an impulsive structure right here. And they took profit leading into the negative headlines and the supply that they dumped onto the market to force prices down when they then turned and began accumulating at the bottoms. So all of the traders and the retail investment community that saw this as distribution, what it actually was reaccumulation after a profit-taking period. Another cycle that we've been tracking for quite some time, this big pullback in the tariff trade war scare was met with high volume. We were covering Amazon at the time and walked members through how to read volume, how to look for volume spikes at the top that would indicate profit being taken, which would lead to the expectation that we might see some sort of a downward move to come down and test some of these prior lows before re-engaging in the ongoing markup campaign, which it did. And so Clarity members are able to follow along as these trades develop. They're exposed to some of the technical components to keep an eye out for, and when larger operators in Wall Street are taking their positions, enabling them to potentially take positions themselves. Here's a clip from our coverage on Amazon. Hasn't really been drawing a lot of headlines. It's just quietly be going about its business, and kind of a textbook case of a managed pause or kind of slow, low volume profit taking. You can see this impulsive structure coming out of the low in late 2022, early 2023. You can see the development of a 1, 2, 3, 4, 5 wave impulsive structure right there. And we see an ABC back test here, back to the point of control, back to the previous distribution from the last cycle. It set up really well the last time we looked at it in April for this move right here, which is what we were looking for coming out of April. And it's exactly what we got. We got this big push coming out of that bottom. Again, 1, 2, 3, 4, 5. We're now looking for the potential of a back test here. So if you're concerned with AI impacting your income, whether it's impacting it currently or not, whether you're retired, whether you've recently inherited some money and you're just looking to hone your own skills, consider joining Clarity. You can cancel at any time. Our interest is in helping our members develop their abilities to recognize the obvious institutional cycle phases so that they're less impacted by the headlines and make less emotional decisions, which is what leads to losses. Thank you for your time. Quick disclaimer, we are long TSLL currently. No position in Meta, no position in Amazon. This video, as well as all trade therapy content, is intended for educational purposes only. Don't consider this investment advice. If you're interested in learning more about Clarity, there'll be a link up in a moment. If you're interested in engaging with us for investment advisory services, we'd be happy to hear from you. Thank you for your time and hope to see you soon.